Hello everyone, this is Jay, and today it's Friday. I already made my deposit into my dividend portfolio, and I also made a small deposit into my growth portfolio. And of course, I want to take a look today and review where am I going to allocate that money into. And I also wanted to review a stock that one of the subscribers announced, Christopher. He suggested in the comment section. So I want to review it very quickly. And then I also want to show you the friendly challenge that I have with Jeremy. I'm going to show you a screenshot, which is this one right here. And I bought my $10 of Apple on February 7th. He posted a comment in one of my videos. He said that he had already purchased the $10 of Visa. So we have a friendly challenge to any of you that are new to the channel. We have a friendly subscriber to content creator channel that he proposed, where I am going to buy $10 of Apple on a weekly basis in February, and he's going to buy $10 of Visa because he has been neglecting. And I guess it is a nice, friendly challenge for us to continue to grow two positions that we have neglected. So it is a nice one. I did buy the $10. I already added it into the spreadsheet. And then he buys every Monday he's going to buy. So I'm going to buy on Monday also. What this helped me with also is that I deposit an extra $10 for those $10 that I'm going to be buying of Apple. So it helps me also deposit a little bit more into my positions. All right, and this is it right here. This is the comment from Christopher Dukes 4649. Christopher has been a very active subscriber, especially in the comment section. Has been commenting, leaving his opinion, which is definitely awesome. So the comment says this: good job on picking up Google. The spinoff from GE Healthcare Technologies reported earnings this morning and are up now over 10%. I've been buying heavily in this stock over the past month, and it's paid off huge this morning. Buying quality companies and waiting for them to move up is the name of the game for sure. Congratulations again on picking up Google. Well, thank you very much, Christopher, for your support, of course, as always. And let's take a look. I have it right here open in the stock analysis tab. So right here, the name of the company is GE Healthcare Technologies, Inc. This is a company that engages in development, manufacture, and marketing of products, services, and complementary digital solutions used in the diagnosis, treatment, and monitoring of patients in the United States, Canada, Europe, Middle East, Africa, China, Taiwan, Mongolia, Hong Kong, and internationally. So this is definitely a company that, even though it's based in the US, is pretty much like an international company. I like these kind of companies. Why? Because it's like you're investing internationally without having to pay the taxes, right? The company operates through 4 segments, which is imaging, ultrasound, patient care solutions, and pharmaceutical diagnostics. I like that. I like the imaging and the ultrasound because that's not gonna go away anytime soon. Actually, none of these 4, honestly. So this is definitely something, a company that will most likely have a very nice future. I like the healthcare sector, honestly. So this one calls my attention a lot. Market cap for this company is $37 billion. EPS, earnings per share, is only 304. The PE ratio, it is 26.99. And the forward PE is 1996, so there might be some sign of undervaluation, but of course, none of that is facts yet, because no one can predict the future, right? Dividend, this company does pay a dividend. It is only 12 cents per share per year, so the dividend yield is only a 0.15% as of right now. Their ex-dividend date, it was on January 12th of 2024, so I'm sure they paid their dividend already. Their 52-week range has a 52-week low of $62.35 and 52-week high of $87.83. The analysts are calling this a buy right now. Price target is 85.20 $85.20, which is an upside of 3.83%. Right now, for the day, they are up a quarter of a percent. They're up in the last 5 days almost 11%. Wow, definitely very nice upside right here. Um, in share price for sure. In the last month, they're up 7%, almost 7%. In the last year, 16%. So I'm sure, Christopher, you probably bought all of this right here, all this dip right here, which you definitely took advantage of that. That's awesome. This company hasn't been in the stock market for a long time. So it looks since January 4th of 2023. So it is a spin-off. I think he mentioned that, Christopher mentioned that it's a spin-off from GE, General Electric. So I'm guessing now they're focusing their healthcare sector in this stock right here. Now let's go into the financials very quickly. This is they do have some years of income right here. So let's take a look at the revenue. So as you can see, the revenue is growing. So which is good. It's not growing extremely fast, but it's growing a lot at a nice slow pace as of right now. In 2019, they were making a revenue of $16.6 billion. And 2021, $17.5 billion. And in 2023, $19.5 billion. So revenue is growing, which is a good sign. The earnings per share, it has been going down. Okay, so from 4.91 in 2021 to 3.06 in 2023. But let's take a look at the free cash flow. Free cash flow has been kind of like steady. It hasn't taken a big dip or it has increased like a lot. So that's probably why they're paying such a small dividend right there. But their free cash flow in 2019 was $1.7 billion. And in 2021, $1.3 billion. So they took a dip. But then in 2022, they went up to $1.8 billion. And now in 2023, $1.7 billion. They might be also paying off debt, which is a good sign, right? The shares, they're not diluting shareholders, right? They're still pretty steady at 454 million to 455 million shares, which is a good sign. Let's take a look at the debt. That's a good one to take a look at. And it seems like their debt is growing. So that is something that I guess you could be concerned, but they're making some good free cash flow. Their dividends are not that much, like it's very, very low. So I'm sure they're gonna start paying off some of that debt. So I would say this is one that definitely to keep in the watch list for the future. I like most of the numbers that they have, except this debt right here. But it's something that they're most likely gonna be paying off. Seems like their free cash flow is steady. So I like it. I like the company so far. I think I'll put it on my watch list for sure. And the analysts are calling this a consensus buy as of right now. The low, it is $66. That's what they estimate is going to be the low in the next 12 months. These are, of course, estimates. These are not set in stone. The average, $85, which is very close to the price that is at right now, which is at $82.06. And it looks like it's got a pre-market. It went up 0.29%. So it looks like it's going to continue to go up. Then the highest price is going to be $97 per share. So that's some very nice upside. That will be a 18% upside, which is really nice, actually. I like the company, honestly. I do. Their dividend yield, it is still very small. It's at 0.15%. The payout ratio is very small, so that's what I kind of figure. It's only 3.95%. So they don't pay that much. They don't use much of their free cash flow for dividends, which is good, actually. So that means that they can continue to use their free cash flow to either invest into the company or pay off that debt. which is definitely great. All right, so let's go right into my portfolio. That was a nice one, Christopher. Thank you for sharing. I'm also going to be reviewing SPGI and Moody's next week, which were recommended by Randy, one of my longtime subscribers also. And SPGI right now is on a dip. So I definitely want to take a look at that one. After they announced earnings, they took a dip. So do some research on that one also. I'm going to be making a video hopefully next week at the beginning of the week. I'll try to do it Sunday so I can post it on Monday. Then right here, this is my portfolio. This is where I keep track of my holdings. As you can see, I do have more red. My portfolio is down some more from the past couple of weeks. It is down to 0.44% in performance. I'm up only $47 right now. As you can see right here, MPW have me down a lot, 64%. Apple, which was one that I just added to this week, another $10. My cost per share was at $132. He brought it up to $134. So I'm pretty much going to be buying $40 this month of February, together in the challenge with Jeremy. So, but another one that I'm going to be buying, CanView, I believe that they missed earnings, so they took another dip. This one I'm going to continue buying. I'm going to continue buying one cup of coffee at a time, right? You know, every week. Right now, it took a dip to $19.33. I still have faith on this company. My plan was to hold long term. So, I'm still going to try to stick to my plan. I'm not going to panic. I'm just going to buy some more, continue to buy $5 every week, and just continue to grow that position. My yield on cost right now, it is 3.48% on this company right here. So I'm hoping nothing goes wrong to where they cut their dividend or anything like that. That's the spinoff from Johnson & Johnson. So this one, I am going to continue to buy one cup of coffee every week, pretty much. $5 every week. Vici is one that went down also with Realty Income. Vici, I am down in the negative right now by 1.67%. The real estate sector pretty much went down because Jerome Powell announced that they're not cutting any interest rates yet. So everyone pretty much was like, oh, gotta panic. Let's sell. So I'm going to take advantage of that. I'm going to be buying more Vici. I really like this real estate company also. For any of you that don't know, ticker symbol is VICI. They own a big chunk of the Las Vegas Strip buildings. So that's really good. That's really nice. That place is always busy. So they have a rent pretty much 100%. They're gonna continue to get paid, so that's good. And PFE Pfizer, it has been staying around in the 20s, in the middle high 20s. So I'm gonna continue buying one cup of coffee at a time, right? $5 every week. I'm just gonna continue buying. I was buying a little bit heavier before, and now I'll slow down a little bit because I want to continue growing some of my other positions. The two that I really want to buy a little bit more heavier this week are going to be Johnson & Johnson, which is down right now to $156 again. Every time it goes down to the 150s, I like to buy a little bit more. So I'm going to try to buy at least $10 this week of Johnson & Johnson. My share price is $160.22. I'm in the negative by 2%. Which is not much, so I want to continue buying a little bit more. My position has been growing very nice, pretty much 1 to 2 cup of coffees at a time, and I already have $828 invested into Johnson & Johnson. Wow, time definitely flies, and definitely even by putting $10, $15, $5, $20 on a weekly basis, it really grows. Like you can really see the grow at first. You are gonna get discouraged. You're gonna be like, oh my gosh, I haven't, my portfolio is not at 100,000 yet, but if you stay consistent, I'm telling you, it just continues to grow. And this is something that I really like, and I'm just gonna continue to pretty much preach it in this channel. $5, that's all it takes. That's all. That's how I have been growing this dividend portfolio right here with just $5 at a time. I'm doing the same thing with my growth portfolio. And one of my favorite positions, definitely, that is performing very, very good is VGT. One of my favorite growth ETFs, if it's not my favorite. Definitely in the future, I'm going to be very happy with the VGT. Oops, I moved it. This mouse is very sensitive. And definitely Johnson & Johnson, I'm going to be buying a little bit more. I'm really excited for that one. Realty Income, it took a dip to $53. So I'm kind of taking this as an opportunity to buy some more on the cheap before it goes back up again like it did recently. So I'm gonna try to buy $10. And yes, I know someone in the comment section mentioned that I'm very heavy in the real estate sector, but it's just right now I see it as an opportunity. So why not? Maybe in the future, once interest rates start getting cut, the real estate sector will boom. Then I'm not gonna be buying anymore because it's gonna be way above my cost. And then I don't know, maybe I like the valuations, but the real estate sector, I like to buy it cheaper and just hold it when it's more expensive, honestly, and just collect those dividends. And I'll let the dividends do the job for me, and just continue to buy me shares, right? Realty Income right now pays me every month. It should pay me $6, around $6.60. I should get paid this February also. So that's gonna be awesome. I got a couple companies that are gonna be paying me in February. Let me see. PG, Procter and Gamble will be paying me. I have the dividends reinvested into that. I'm sorry I took a turn, but I definitely wanted to take a quick look at that. Starbucks will be paying me some dividends, but this is a very small dividend, including with Apple. Also will be paying me a dividend, but that's a very small dividend. Apple, I do have the reinvestment on. So the Apple, I don't have the reinvestment on. Maybe I should have turned it on, but it's just such a small dividend. I was just gonna use it to maybe complete $1 and put it into something else. That's what I'm thinking on doing with the Apple. I just like the share price appreciation in Apple. The Kenvue right here, I will also be getting paid in February, which is definitely awesome. Sorry about that. And then I'll be getting paid for my main and all Realty Income positions right there. That's gonna be awesome. In March is gonna be really nice. I can't wait for March. That's definitely gonna be a great month for March. All right, everyone. Please leave me in the comment section. What are you buying this week? What have you been buying as of lately? Are you taking the same approach as me, buying one cup of coffee at a time, $5-10 into your positions every week? Definitely it works to me, in my opinion. Of course, I'm not a financial advisor, guys, so don't always do your research, right? And please don't forget to hit that like button. I forgot to mention that. I'm over 500 subscribers, which is definitely awesome. I'm trying to reach 600 now. Small goals, right? I'm setting up small goals, so I'm hoping some of you that are new to the channel subscribe. So please subscribe to the channel to continue to support the channel, and hit the like button. I really appreciate it. It won't cost you anything. I'm not asking for any money or anything like that. Just hit the like button and subscribe to the channel, just to show support to the channel, and I really appreciate it. All right, everyone, please leave me your opinions in the comment section. What are you buying this week? Which stocks are good right now? SPGI, definitely one that is on a dip right now. Gonna do some research next week. Thank you, Randy, for that one. And thank you to Christopher for mentioning GEHC. I did like that company right there, so I definitely appreciate it. Please like, subscribe, and I'll see you on the next one. Thank you. Disclaimer: I am not a financial advisor, and this is for entertainment purposes only. Please do your due diligence and research before investing in the stock market. Thank you.